Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I am Yash Maheshwari, and with me in the studio, as always, is Amit Ranjan. It's a Thursday morning and a green start to the day for the markets as Nifty has opened gap up. It's back above 22,000. The broader markets, they are seeing one of their strongest opening in weeks. Both mid and small caps are up 1.5 to 2%. And I mean, we'll get to what's driving the markets higher in just a bit from now. Spoiler alert, it's the global cues. Actually, let's address the elephant in the room head first. We were awaiting, federal policy's decision on interest rates. The verdict is out. They have maintained interest rates. I think, that's nothing is surprising about that. But Amit, I'll come to you. Interest rate status quo is maintained. What's driving the markets higher then?
It's a broader cue that there will be 3 rate cuts. Now, probably the markets are expecting the first to come sooner than they expected. So, probably sooner than July.
Right.
Yes.
June.
Sooner than June.
Yeah.
But June, July was where the markets were expecting them. The broader picture on gradual and bumpy disinflation has remained intact.
Right.
So, they had beaten all the figures, whether it was PPI, CPI, which we spoke earlier on, had beaten expectations. But despite that, the Fed has remained intact on their policy on rate cuts,
Right.
not getting too panicky, using a very heavy term, that to have an early rate cut. That's not going to happen. But the markets have reacted positively across the board. We had one red yesterday, not a single red today. It's all in the green. Dow Jones closed in the positive at 1.03%, S&P 0.89%, Nasdaq 1.25% in the positive. Stock 600 remained unchanged from the previous day's closing.
It's absolutely flat.
Absolutely flat. Hang Seng is up 1.75%. So the optimism has basically rubbed on even onto the Asian markets. Nikkei was in the news. For a brief period, they jumped 700 points to have an all-time intraday high.
Record high also.
Record
right?
high. So right now they are up 1.67%. Tesla, I had named yesterday, was in the red, but look at the choppy feature of that kind of a stock. It is up. It closed up 2.53%. So it's green everywhere. There is optimism with the decisions that the Fed has basically indicated.
All right, and the status quo as far as the interest rates go was expected. I think none of us were surprised by the Fed maintaining the rates, but I think what came as a surprise, and a positive surprise at that, is that Mr. Powell is sounding more dovish in his commentary. Just a couple of things I'll point out that stood out for me. Mr. Powell said that the recent stronger inflation data won't stop the Federal Reserve from cutting interest rates. The projection is still 3 rate cuts in calendar 2024, as Amit pointed out. Fed now sees the inflation print that came out in January and February as merely a bump in the road, meaning that they don't expect it to become a trend. I mean, unless, essentially what they're saying is that unless, that inflation print comes in like really ugly, they, won't deviate from that 3 interest rate cuts, the verdict that they had put out, the decision that they had made earlier. And, May, I think no one is expecting a rate cut, very less people are, unless, Federal Reserve decides to surprise us and goes for a nominal sort of a rate cut, a 15-point rate cut or something. But June is where the markets are factoring in a rate cut now. As a result, the US 10-year Treasury yields, they slipped marginally. The last time I checked, it was around the 4.28% mark. The dollar index, that has also reversed and now it's into losses. It has slipped by about 0.3%. As we speak, it sits at 103.22 levels. Unrelated to Fed policy, crude oil prices, that saw a technical pullback. Brent crude has slipped by over 1% and the prices are now below $87 a barrel. There was an expiry of WTI contracts, so that could lead that could be one of the factors behind this pullback that we are seeing in Brent crude overnight and this morning as well. And crude is essential, right? This will obviously have a positive impact on OMC stocks and other company stocks where crude is an essential raw material. Paint, tires, certain chemicals come to my mind. But talking about our markets, I mean, Nifty has opened gap up. It has reclaimed 22,000 in the morning trade, given the strong opening. I think most of the positives have now already been priced in. Now we need to see if the markets can actually hold on to the gains and more importantly build on to it. I mean, I wouldn't look at today's price action as a reversal of the downtrend. Markets still need to hold on to the gains, as I mentioned. It's been a sell on rise sort of a market, so that could happen once again. Keep an eye out for that. And remember, today is the FNO expiry for Nifty contracts, so the markets will be choppy. They are expected to be choppy. But we are heading into a longer weekend as well. The markets will be shut on Monday on account of Holi. Then we have a bunch of expiries lined up. Tuesday, Nifty Financial Services. Wednesday, Nifty Bank. And then the big one on Thursday, the March series FNO expiry for Nifty contracts. And Friday, again, it's a holiday. So the markets will be, very choppy and they'll react as and when the news come. But again, it's a green morning. We have opened, higher, given and considering how the markets have trended in the last few weeks actually. It's been a sell on rise market, and we would give up all the gains that we would make at that mid-morning trade. But yesterday, something very interesting happened. I mean, if you look at on a day-to-day basis, Nifty was absolutely flat. The broader markets were absolutely flat, but a lot of choppiness was seen in the markets. The markets were positioning themselves ahead of this policy decision that was to come out, and there was a big doji formation on the price charts. The optimist out there would say that, oh, we recovered from 21,700, which by the way was the lowest level Nifty has seen in over a month. So we are back in that zone of around 21,800, 900 odd levels. But the pessimist would say that the markets are still not able to conquer that. Remember, 21,900, as we had pointed out, was a key resistance for the index. But again, today we have opened above that. We have broken several key resistance on the upside, 21,900, 930, your 50 DMA, as well as your 22,000, which is the key psychological level. So the markets are showing signs of strength, but to understand more and make sense of how the markets are currently positioned, joining us to share her views on the market is Soni Patnaik of JM Financial. Hi Soni, thank you for joining us here on News 9. Nice to see you. I mean, very good start to the trading day. Nifty has reclaimed 22,000. But do you think that this is sustainable? Because, of course, this bounce, this gap up opening is on the back of a macroeconomic event. Do you think we can hold on to the gains? Because, the market momentum has been sort of tilted towards a sell on rise sort of a market. And 21,100 has been, a resistance zone for us.
Hi, good morning, Suyash. Thank you so much for having me on the show. I think, yes, rightly you've pointed out there's a resistance, there's a congestion at which Nifty has opened up to, and it does not seem to be crossing that resistance. It's 22,050, 22,100. There's that congestion zone. Until and unless Nifty is not able to take out these levels, there could be some selling pressure at these levels and maybe a profit booking. The overall range seems to be somewhere between 21,700 to 22,100 at best. I think there's this level that can consolidation that can continue. In any case, the trend reversal can only happen if Nifty successfully takes out 22,200 level on closing basis. Then we can see it retesting the all-time highs of 22,500 plus levels. Until then, there could be some consolidation. There's just one point of concern that we need to still remember is that the FI's position in the long-short ratio for derivatives space, it has reduced drastically. We started the March series with 35% of longs. It went all the way to 46, 47%. And now it has come down to 31% longs. So it's not indicating that a lot of shorts are getting pumped into the system, but more of the long positions that are getting unwounded or squeezed out of the system. I think that's just one thing that we need to remember. And going forward, it's the rollover week. So I think that's again going to play a huge role and huge impact in Nifty for the coming week.
All right, and also want to get your views on Nifty Bank. Very strong opening in line with Nifty. It is up actually 1% as we speak. Has it's hovering around that 46,800 zone. I remember that has also been a crucial resistance zone. We have time and again reversed course from here on. So that is that the level that you are also tracking?
Bank, I believe that 46,000 has held on to as a support on closing basis.
Right.
And today, there's this resistance around for 46,800, 47,000. It's very crucial. It has to cross these levels. There are multiple resistances for Bank Nifty. It can come up to 47,200, 47,500. 48,200. So I think these are the multiple levels of resistance that Bank Nifty has to cross. The only point, the only strength it will confirm is once it has crossed 48,200, which is a bit far from current levels that we can see. But any move above 48,200 and Bank Nifty is back on track, you can see it retesting its previous all-time highs of 48,600, 49,000. So I think a lot is getting dependent on Bank Nifty as of now. As long as 46,000 is not getting breached on closing basis, the support can remain intact and maybe a bit of a consolidation for a week or so, but then Bank Nifty can have the strength to move forward.
All right, Bank Nifty, of course, as we know, has a very high weightage for Nifty as well. It has a, banking and financial stocks have about a 30 to 35% weightage on Nifty. So a direction, what direction Nifty Bank goes plays a huge role where Nifty goes as well. But on that thought, let's slip into a short break. Please stay with us, Soni.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9, and we have been talking about markets and how they have reclaimed 22,000. But remember, until yesterday, we were struggling. Nifty was struggling. It formed a doji sort of a candle. A very few stocks in that Nifty pack were providing support to the index. One of them, although, was Maruti Suzuki. The stock surged past 12,000 levels for the very first time yesterday. It is at record high levels, has surged by about 15% on a year-to-date basis. But Sony, coming to you, I mean, Maruti Suzuki has done phenomenally well in the past couple of months. At record high, 12,000 has been achieved. How much higher can it go on price charts?
I think Maruti definitely it has given very fresh breakout, and there's strong long built up positions that was witnessed yesterday. One can, if somebody has already bought in at yesterday's level, you can just trail your stop losses to 11,700, which is a important support on immediate basis. But the crucial support has definitely risen higher from 11,200 to 11,500 as of now. So any small dip can be a point to reinitiate the longs. The higher targets for Maruti stands at 12,200, 12,400 as of now.
Morning, Sony, and I'll drive your attention towards Patanjali. The company has been in legal trouble with the court issuing summons to Baba Ramdev to appear in court. Now the MD, Balkrishna Acharya, has issued an unconditional apology for the misleading claims the Patanjali advertisements made for cures for diabetes, asthma and whatnot. Their stock has been floundering, whether we see last 5 days, last 1 month, it has been in the negative. Last 1 month, almost 16%. Today, the stock is in the positive, almost 1.24% up right now. Do you think the apology is helping? What do you make of the stock? Time to get in or wait and watch?
I think it's better just to wait and watch. It is heading towards a resistance of around 1400 to 1420 as on charts. Only if it's able to take out these resistance levels, you can see it further heading towards 1500, 1550 odd levels. So I think it's just wise to wait and watch. The support currently from current levels can be seen around 1330, but then the risk reward ratio does not seem too favorable just to enter at current levels. I think it's just better to wait out, watch, and then let these resistance be taken out.
It is still far from its 52-week high. So do you see that come anywhere close to that, or it's going to fall further?
I think it's close to that, but then there's this resistance also. So I think it makes sense just to sort of wait and watch right now, and not hurry into the trade until and unless the resistance is not taken out.
Okay. And Sony, what are your picks for our investors today?
So the first would be in Sun Pharma. I think Sun Pharma has taken very strong, good support from 1520, 1530 odd levels. So one can just enter Sun Pharma at current levels, keeping a stop loss of 1520 and targets of 1600 to 1620 can be looked at for the targets. The second pick is in ABB, fresh breakouts. It has taken multiple support from 5600, 5700, very strong support. So from a positional play, ABB can be definitely looked at with stop loss of 5750 and targets of 6000 plus levels also in for ABB. The third pick is in ONGC, March series 270 call option. You can buy it in the range of 1.8 to 2.1 with a stop loss of 0.5 and target of 5. Out of these three picks, ONGC and Sun Pharma are our picks, and we've also recommended with the same views to our clients in JM. And the last pick comes out to be in the power space, Tata Power. It's showing good long built positions today, and it has a good support of around 384, 385. So keeping a stop loss of 385 and a target of 400. Tata Power has also witnessing a significant open interest unwinding at higher strike prices, such as 390 call option, 400 call option, which is indicating that the call writers are exiting. And there's a chance that Tata Power can see the short covering happening up to 400, 405 odd levels. So there's one reason. So that's one of the, it's looking positive. And even Tata Power is recommended today to our GM clients via 400 call option for March series.
All right, ABB, Tata Power, ONGC and Sun Pharma are the short-term trading ideas from Sony Patnaik. Ma'am, thank you for being with us on News 9. Great insights from you. But let's also look at how the markets are doing, because we are holding on above 22,000. Nifty as we speak is moving higher. It's moving higher towards its respective day's high. Currently, the intraday high is at around 22,044 mark. We are currently just about 12 points shy of it. Nifty is up 0.88%, and this is as of 10:05 a.m. this morning. Sensex is also up 0.8%. It's around that 72,650 zone. Nifty mid cap and the small cap indices, they are raging on. Both indices are up around 1.8 to 2% or so. Nifty mid cap 100 is actually up 1.8% at 46,749 as we speak. The small cap index is up 2.14%, and it's very, it's closing in on that 15,000 levels. We are just about 95 points shy of it, and good to see, volatility come down. India VIX this morning has slipped below 13 levels. In fact, we have not seen India VIX being in that 12 sort of zone for the longest of times. I mean, at least, we have seen it pretty much, a couple of times just in the past 2-3 months, and because the volatility has been high in the market, it will just be for a couple of minutes, and it would jump back up again. And remember, we have spent a lot of time in that 15-16 odd zone on India VIX. So good to see volatility come down and slip significantly in just a matter of 2-3 weeks. But remember, there is a lot of choppiness in the system still. We have a bunch of expiries lined up, and next week it's going to be a shorter week. It will just be 3 trading days. But even if you look at the markets, they are doing well this morning, but keep in mind how it has been in the past 2-3 weeks. The market has been a sell on rise sort of a market, and we have struggled. We would kind of go up to certain levels, certain resistance zones that we have put forth for you in this show, but the markets could not and would not hold on to the gains. And I think a lot of focus has been on the broader markets and what's going on there. Yesterday after SEBI, RBI stepped forward and said, there is froth building up in the system. They were also concerned about, your valuations in the broader markets in both the small and the mid caps. But there are other themes also playing out, and Jefferies for one is bullish on EMS, that is electronic manufacturing services. Amit over here, tell us what makes Jefferies bullish on EMS, and what are the stocks that you are tracking in this space?
Bullish and how, and some of the major stocks that they are optimistic about in this sector. They project that the earnings per share compounded annual growth rate would be as much as between 55 and 60%. The stocks they are most bullish on are Dixon Tech, Keynes Technologies, Syrma SGD, and Amber Enterprises. Now, the reasons why this sector Jefferies is bullish on: one, it is a sunrise sector in India. Two, the government has given a big push to this sector, with the likes of Apple, Samsung setting up shop here, manufacturing most of their produce from India, and that gives a fillip to electronic manufacturing services sector as a supplier and a backward linkage to this sector. Be it in the auto sector, the PLI scheme and the China Plus One factor have played a big role in this sector booming the way it is, and the optimism that is growing towards this sector, added to which the labor reforms that came few years ago and the resulting lower labor costs, which are, as it is low, are giving basically a fillip to the optimism that investors and brokerages are having towards this sector. You look at the stocks in this sector across the board, whether it is Syrma, whether it is Honeywell, Dixon almost 140% in the last 1 year. Keynes Technologies, which another stock that Jefferies is bullish on, 171% returns earnings in the last 1 year. So yeah, this is a sunrise sector, and more to come, because the fillip that the government is giving in this space, and even auto with all the schemes, is just going to go up and up.
All right, definitely a sunrise sector. We live in Delhi NCR. I mean, we are seeing all these factories prop up. It was Samsung that came back around 3-4 years ago. Dixon Technologies has some work set up in Delhi as well. So a lot of these industries, they are moving, in this area. We are seeing that firsthand play out in the last half decade or so. But, moving on, we were talking about oil, how it has slipped by, it has seen a technical pullback. Remember, crude oil prices had scaled past $87 a barrel. They were at 4-month high, and that is very critical for us because remember, India is a net importer of crude. So, whenever crude oil prices rise, it directly becomes, since it becomes more expensive for us, that becomes a problem. And secondly, a lot of these industries, they depend on oil as an essential raw material. But one particular sector that a lot of us were talking about, because we were seeing a significant correction in those group of stocks, those oil marketing companies. Oil marketing companies, until yesterday, they had crashed about 11-12% in a matter of just 3 days. Remember, there were two events. One, crude oil prices were going up, so that since crude is an input for them, a raw material for them, so the input cost was going up. And second, the government had cut fuel prices by ₹2 both on petrol and diesel. So again, that was going to impact their profit margin. So a double whammy, it was a double whammy for them. But this morning, since we are seeing a technical sort of a pullback, some of these stocks are doing fairly well. In fact, I am looking at HPCL, Hindustan Petroleum, it's up almost 2.7%. Bharat Petroleum is up 3%, and Indian Oil, that's also up almost 3%. So keep an eye out on that. There are other related sectors as well. It's your tires, it's your paints. They all benefit from a reduction in oil prices. Amit, you want to add to that?
Yeah, no, HPCL is a case to point. It was down almost 10% yesterday.
Right.
Yeah, so in the last 5 days. So yeah, if it is up today, that's something that's a big up.
Right.
And the optimism, like I said, is basically pointing in the up direction.
So that of course is on the back of oil prices that have fallen, crude oil prices, and the markets are also rising. So remember that. So there is not just the fall in crude prices that is inspiring some of these stocks to go up, but the markets are also rising. And look at Nifty currently. We saw a very strong opening and it's moving higher. Usually what happens on a day when the markets open gap up, most of the positives are priced in right at the very opening. So there is very much there is not very much left for the retail investors to make and make money from these positive global cues. But the markets, they are remaining buoyant because of course the federal policy decision was a big event for the market. The inflation data had come in hot for the month of January and February, and that was making the markets a little jittery because remember, last year, actually, the last 2-3 months since October's low, the markets, they were almost rallying unilaterally across the globe, and that was on the back of expectations that the rate cuts are going to happen sooner than later. A lot of these analysts, they were expecting up to 100-125 point basis rate cut, but the Fed kind of flipped that script on us in the March policy decision. They said, hold on, just wait for inflation to cool down a bit, and that picture to clear out, let it come closer to that 2% target of ours. But this time the policy decision is at least the commentary is more dovish. They are saying that the slightly hotter inflation print, it could be a seasonality effect, and that won't impact their decision to go ahead with rate cuts unless the situation gets really ugly, which they don't predict. So 3 rate cuts is what they are expecting, and that's what the market is celebrating. On that note, let's end this show. Thank you for watching. We'll see you at 4. Up next is World Business Report.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known.